Hello, I'm David Cassidy with the midweek market update. Today, Thursday, 10th of June. There's been no significant economic data releases so far this week, and given inflation continues to be the hot topic, all eyes are on the US CPI inflation reading, which will be released later on today. As such, it's been a rather uneventful week so far, with most of the major global equity markets little unchanged. Now, while we fully expect today's US inflation reading will show a big year-on-year increase, we remain sceptical that we will see a sustained increase in US inflation, as we simply don't believe that these increases have staying power. Last year's distorted commodity prices will quickly pass through the data calculations, while the supply chain disruptions caused by the coronavirus lockdowns should soon start to normalise. Additionally, it was pleasing to note that while data from China yesterday showed that PPI inflation rose from 6.8% in April to 9% in May, which was not only much higher than economists expected, but actually the fastest pace since 2008. But Chinese CPI only increased to 1.3% from 0.9%, which was significantly lower than the major economists expected, which suggests that producer prices aren't feeding through into consumer prices. So, fingers crossed, all the recent hype surrounding runaway inflation and, as a byproduct, higher interest rates, today's US CPI inflation reading will turn out to be much ado about nothing, and the market narrative can move on, especially as we believe we are entering a Goldilocks environment. This is where the economy is like a good porridge, neither too hot nor too cold, but just right. Financial markets love this type of environment, as it is one that allows the global economy and then the employment market to recover and then grow with no significant underlying inflationary pressures. And this, in turn, lets the major global central banks, the Fed, the Bank of England, the European Central Bank and the Bank of Japan, to maintain their respective accommodative monetary policies and allow company earnings to grow.